Hi, I'm Martin McGrath from Financial Close Group. Today I want to talk to you about how to best use your business profits and get them out in the most tax effective manner. You might operate a business and things are going really well. You might get some advice from your accountant about how much tax do I have to pay. That's important. We work with a lot of accountants to make sure that the tax side of things is looked after. What we really try and help people do is to make sure that's coming out most optimally, most tax effectively, in the right name, in the right space each and every year. So what I mean by that is that often people just take some wages out and that's it. Pay some tax, pay PAYG, pay super on top. And whatever they make, they take out in wages. That might be all right, but it's important to know that there are other ways. There's more than one way to achieve this. And there's reasons why we want to do that. That might look like different wages for different parties. Might mean that the partner or the spouse might be paid more or less depending on where we're trying to land them for tax outcomes. It might mean that we pay some dividends or trust distributions depending upon the structure you're in. They come with different benefits from that. Dividends come with a thing called franking credits, and they are super effective used in the right manner. Where effectively you can get some money out potentially tax-free if you're on the right personal tax rate, because you might get a 30% franking credit. In some cases get some tax back, or only have to pay the top-up tax. So if you're at a 39% tax bracket and you're taking out a dividend, you're effectively only paying tax at about 9% rather than wages at 39%. There's a flow-on effect for that. We want to make sure we do it the right way, but there's more than one way to do that. It might mean that you have a director's fee one year. There's a reason we might do that, take a director's fee or take a director's loan account. They're important to make sure they're set up the right way, but often they might be able to let us use and manipulate legally the right tax thresholds, the right tax outcomes. You end up with the same money in your pocket, but it's reported differently from an accounting perspective and therefore a tax perspective. So it's important to be smart with this money and making sure we're getting it in the right manner. At the end of the day, we want to achieve the right goals. What do we need to live off? We want 100 grand a year, 150 grand a year after tax. Cool. How do we get that out in the most tax effective manner? It's not always the first thing that comes to mind. There can be some very creative ways that if we implement the right way, can help you save a lot of tax and set yourself up to use that wealth in other ways to better yourself in the future. This makes sense. We've got a whole business series where we're talking about all this kind of stuff. Feel free to check them out on our Facebook page or YouTube channel at financialliaisegroup.com.au. We love helping and supporting business owners to do things smarter rather than harder.